Hello and welcome to another episode of Casual Friday. I'm here with the Duck. As always, the show is brought to you by Woo. Links available in the description below. Obviously, the show is on Sunday, but that's because Don said he was unavailable and he wanted to do a show
Fuck you.
closer to the weekly close. And I protested. I said, listen, Don, consistency and a good schedule is everything. But then he disagreed. So here we are on Sunday. Don, how are you?
Fuck you. Oh, the exact opposite happened. Just so we have it written, set down, whatever you wanna call it.
We'll
But
let the judge decide, okay?
yeah. I think everyone knows that that's on you.
When we get custody of Technical Roundup, whoever wants this bastard child in our divorce.
Aye. Let's not talk about that. It's too sad
It's
for
too sad.
Sunday morning.
That's true.
No, I'm doing good. How about you?
Fantastic. Slightly beaten up, but good. The monthly time frame, our favorite time frame, the highest signal time frame with the most alpha and the biggest moves, has 6 days left until another earth-shattering consequential monthly close on.
Yeah.
So is this going to be the one? Very simple question. It looks like it's still going to close above 59k for the fifth time or whatever. 1, 2, 3, 4. Oh, it'd be the sixth time or seventh, depending on whether you count the retest closes or not. So another monthly signal. Is this something? You did tweet the monthly chart and you used it as your high time frame sort of bull bear arguments when going through the different time frames on Twitter. Is there anything special about this one, or are your hopes still, measured given how most of these monthlies have played out?
No. I mean, the monthly, in my opinion, if you just look at it, this is a bullish chart.
Yes.
And now that we had this month, like this kind of like wipeout candle, it's even more of a bullish chart, I would say. Before I had my doubts, right? Because before, like, we were just leaning on that support a bunch and didn't really do anything, which I don't like. But now that we've kind of like went below everything, wiped out to like very close to the next support, it's much better. I like the monthly chart. Like, just straight up, even if you turn off all the lines, like, that's a bullish chart. I don't think anyone can argue this. The only argument that you can make is whether like it's more or less bullish, but I don't think you can argue that that's a bearish chart.
So next month is the month, is all I'm hearing.
I mean, the problem with saying that, right? I do think so. Like, I think next month's probably gonna be green. But the problem with saying that is that it does rely on the traditional markets, and they've been like a little bit volatile. But because we are now, like, I think with Bitcoin at 70, like 60, 70K, we are like a big enough market that we actually do get influenced quite heavily by the traditional market. So like, just being like, hey, this chart looks really good, so we can only go up, I don't think that's necessarily the case anymore. Like, back in the day, if the monthly reached support, I'd have almost 100% confidence that, yeah, now we're gonna go up. Now it's a little bit less so, just because of that whole like trad market entanglement. But still, like, it's at least a sign that we might not disappoint if the trad markets go up and Bitcoin looks like this. I think there's like a very high chance that Bitcoin goes up more than the trad markets even. But if the trad markets go down, obviously can still everything can still go to shit, I think.
Yeah, that's still been a bit of a strained relationship recently. Like last we spoke, we didn't, in general, we didn't have any of the upside capture and like all of the downside capture. Then more recently, when there were some corrective intraday moves in indices, BTC was more or less fine. So at best, I think it's noisy, and maybe should be viewed from like a much higher time frame sort of perspective. And I mean, even if we sort of jump a little bit to the S&P, if I just fire up the SPX or whatever, I mean that's not a bearish chart, right? Like, it's in a
No.
scary looking whatever lower high meme territory, but that's not really how the S&P tends to operate from my limited experience. What is the CFD ticker for the S&P 500? US 500 or something? I deleted it because I was reworking yeah, there we go.
I think
US
so.
500. I mean, yeah, look, this thing had a corrective leg that BTC didn't take a part in, like on the intraday, and I think the Nasdaq had a similar type of move, and then it kind of just went up, right?
Yeah.
and BTC's basically been, we had the intraday breakout on this type of thing and a really strong move through the consolidation, but we seemingly ignored that pullback, which was quite nice. So yeah, monthly, God, I mean, using it for signal has been tricky, but I'm totally on board. This being the month, because what more do you? I mean, the only sort of difficulty with that argument is a lot of the premises have been used before. Like, okay, but this is the retest. This is the one that swept. I guess this is the biggest monthly wipeout out of all of them.
Yes.
But then it reminds me of that Homer Simpson meme, the biggest monthly wipeout so far,
Yeah, no, I don't think we would do that again. Like, I don't think we would go and sweep this low and then go back up
No,
again.
no, enough is enough.
So basically, we're in the situation where if the low is not in, we're gonna go so much lower. And that's at least like that. I didn't have that when we went to like 53K the last time, where I was like, okay, this low, like if that gets taken out, like I was like, there's a good chance that this low gets taken out, and I mean the market can still do whatever the fuck it wants.
Sure.
Now I think we take that low out, that 49K low. I mean that's fucking horrendous. And then we probably go towards like 44 and then range there for quite a while. So I think like right now we're at least in a situation where it's a little bit do or die. Just looking at the monthly, right, and ignoring all other time frames, it just looks like it wants to do and not die. But the weekly time frame looks much worse if you want to have something bad to talk about.
It's the time frame that lives in your nightmares, doesn't it?
Yeah.
Also, all I'm hearing from your monthly as well is that you're giving me financial advice to swing trade on the monthly with an entry as soon as possible because the big month is coming up. Invalidation is the 49K low and target is 99,999.
No, I don't like it. If you put it like that, I really don't like it.
Don't shoot the messenger.
Yeah, I don't know. Like, I just look at the monthly for my bias, and like the bias is should be bullish, I think. Problems I also use the weekly. Like those two are like my main high time frame biases that I have, and this is why I'm kind of like driving blind, so to speak, because every time I look at the weekly, I'm like, okay, I have to close my eyes to be bullish here because fucking hell, that looks bad.
So on the weekly, we obviously went up since the last show, right?
Yeah.
And it's Sunday, so this channel will be closing tonight.
Yep.
What is it about the week? Is there anything new about the weekly that makes it scary? Just for the audience's benefit, the weekly time frame is one of the weaker ones out of the higher time frames for kind of two reasons in one. Weekly market structure has been bearish. A line chart shows this well. You've got high, low, lower high, lower low, lower high, higher low. That's the interesting development, right? Or at least an attempt at a higher low. I'm sure there'll be some market structure purists who will say, well, it can't be a higher low because it didn't force a higher high. But by the time it forces a higher high, a lot of that signal's already played out. Yeah. So it depends how aggressive you want to be. Generally, you can't wait for confirmation for every single market structure shift if you're trying to catch it early versus catch the strength or weakness that follows, right?
Yeah.
But in any case, there's no higher high on the weekly yet. That's the first point. And the second point is that it's into an area, I guess, of weekly resistance, right? Do you have that red candle cluster, I'm guessing, from, So that's like 60. I mean, the extremity of that is 64K, and we've basically hit the extremity now. So if the weekly candle closes like this, let's say, like at 64K, but not through it, what kind of signal would that generate, if any?
I mean, if I didn't have the monthly, and if I just had the weekly time frame, like, I mean, that's a really good short. Because you're basically like, you're at the edge of where it actually makes sense to be short. Your stop loss is quite clear at like 67, 68. Just like you cannot shift this market structure. And then your target would be at least 52. And then if you're like more bearish, and I think at that point you probably should be, it would be like 44. Like just looking at this thing, like just the weekly, that is the way I think you would have to trade it. It's just that the monthly and the daily don't agree. So like at least like it's a little bit everything is a little bit conflicting right now. But to me, basically, I look on the weekly and I'm like, okay, this is a clear downtrend now. We are attempting a higher low, but we did that right into resistance. We had a rally into that resistance, while yesterday, on Saturday, all the altcoins popped basically. And then you're like, okay, that's not really nice, right? So you have a bunch of like froth. I mean, it's very little, but still like froth coming back into the market at resistance in the last place where you can be bearish. It's not great. And the higher low is gonna get a bunch of people basically super excited, but it's not confirmed, or like doesn't really mean anything before we've pushed higher and like the market structure is bearish. So like looking at this chart, I think, and this is pretty much exactly the opposite to the monthly. Like the monthly, you have to be bullish. This, I think, you kind of have to be bearish. It's getting close to where like the bears are invalidated. This is why I'm like whenever you're really, really close to bearish invalidation, the short gets much more attractive. Just because you're really not going to lose much if your invalidation is really close. So yeah, I have to say like this time frame is bearish to me. And it's actually at a point where it's a really interesting short. I just really don't want to trust it, because I really like the monthly and the daily, and I'm just gonna ignore the weekly. But I'm gonna talk about like just objectively that this is like the place to short it on the weekly time frame.
But that kind of
I'm
signal
just not
isn't
gonna do
enough
it.
for you to manage, sort of give trade management ideas or anything like that? Is it just straight up discretion? The weekly and daily, I'm putting my bets on, and fuck the weekly, basically?
Yeah, and I think just generally like this is because I think we're at this point where either the cycle has ended or we're gonna get like a big push up towards like 80, 90K. Where I'm like, okay, like I have good entries on the stuff that I have, so I'm willing to take like just literally just give all the profits back. And the cool part is like on Bitcoin, basically, I think if we retrace this entire weekly candle, like the current one, like that's pretty much like we're fucked at that point.
Right.
And my entry is basically the low of the weekly candle, like the 58K. So I'm kind of fine just giving back my profits. I don't necessarily think that's the best way to manage trades when you have like a strong bearish signal, as we have right now on the weekly. But I'm willing to risk it this once, because I think we're either at the end of the cycle, or we're gonna make a significant new all-time high on Bitcoin and then push high on the altcoins, very likely. So like just knowing that I'm risking basically like 5K Bitcoin price action that I captured for like a move that would take us into 80K, I'm fine with it. But I'm a little bit conflicted, because I think like usually if I have this where I have like a nice entry and everything, I would close out and then just look at it next week. But right now I'm just like, I'm too lazy to manage all of it, so I'm just like, I'm just gonna take the round trip if I have to. And I think there's a chance that I fully round trip this position. Like I'm not delusional enough to discount the weekly entirely, but I'm like, if it happens, it happens. The reward would be great enough to risk a round trip.
Yeah, I mean, this is it sounds like P&L trading, but at its core, this is fairly sort of consistent for you, i.e., buy low/early, it hits resistance, and then if you're not super convinced by that resistance, you'll hold through it if the upside continuation odds are, or sort of there's enough space until the next resistance it's worth capturing. And that's almost a necessary evil because you fucking hate breakout trading, right?
Oh yeah,
Like,
yeah.
I think a lot of people, people like, oh, ask Don why, get him to explain whatever. I think from my many years of experience as the duck whisperer, a lot of the trading logic can be ascribed to like a seething hatred for breakout trading. So you can like reverse engineer many of your entries and trades and positions, whatever, as like avoidance of breakout trading. Like, how do I catch a move to the upside without catching a breakout? And if you can answer that question, you're probably decently aligned with where you're looking to do business. And sometimes that means you buy like a shitty support into stronger resistance, because that stronger resistance breaks, it's really going to go, and if it really goes, by definition, it's a breakout, and therefore you won't be chasing it, right?
Yeah.
So it's like, where can I put on a position that doesn't require me to chase, even if in the short term it looks like it's closer to resistance or there isn't a ton of space, etc. Is that fair?
Yeah, pretty much. I mean, just generally, like I think you have to be a really exceptional breakout trader to actually make money that way. I think it's much, much easier to buy cheap and sell more expensively. But I think, like, obviously, it's like depending on your skill set, depending on what you're good at. But that's for me, like, kind of figuring out whether breakout is real or not is much harder than just buying, like, when sentiment is really bad and you hit like a support that's decent enough. Like, buying that is usually much easier for me than actually figuring out whether I'm buying into the right breakout or not.
Yeah.
So I just do that instead, and then yeah, just gamble on the breakout. Basically, be like, hey, we're running into that resistance, but you sometimes you just kind of have to hold it. And I think the biggest trades of my career, like all of them, have been exactly this, right? Where I'm like, I know there's resistance here because there's always resistance,
Of
right? Before the
course.
big moves, there's always resistance somewhere. And then I look at it and I'm like, yeah, there's resistance here. Like, good example, the 6K resistance we talked about back in the day. Fucking love talking about that. Like, there's resistance there, but I mean, fuck it, right? Like, the fact that it's come back here means it can go so much higher. And then it did. And this happens all the time. Obviously, sometimes it doesn't work, or like oftentimes it doesn't work. It's just if it doesn't, and you have a decent enough entry, you don't really take too much of a loss. And the rewards are quite great. And so you have to kind of just figure out the resistances that would be significant enough to break, right? Because there's one thing, like, if everyone trades a resistance, it's gonna go hard one way or the other. And if you can figure out like where these points are, it's like you can take these kind of bets ahead of time, right? Because oftentimes these kind of like major levels that everyone is looking at are like just a track price, because that's where everyone wants to do business, right? That's where the breakout traders want to breakout trade. It's where the people that look at support resistance lines are like, oh yeah, this is perfect for me to short, for example. And then you have the FOMO people. They're gonna FOMO into that resistance, closing their eyes, not knowing what's going on. Basically, like, those levels are where everyone is trading, and if you can kind of figure out where they are ahead of time, oftentimes you can, like, and this is kind of what I did in this instance, is you take a trade at a lower level, and then it's very high likelihood that it's actually going to run into that important resistance or support. And then you can make your decisions at that point, whether you want to keep that trade or like for like a breakout possibility, or whether you want to close it. So that for me has been like one of the better ways to trade the market. Just look for the most important areas, see them as a magnet, and then judge whether they're gonna break or not. And that's kind of like how you hit the big winners, in my opinion.
Yeah, no, I mean that's very thorough. I imagine breakout traders basically have some part of that logic reversed, right? Which is, hey, we're at a high time frame sort of point of resolution. The move from there will be big, and therefore it'll be big enough so that I can allow myself to position into or after the fact, as opposed to
Yeah.
predicting whether it's going to break or hold. So in your case, in many cases, if you're doing less of the explicit prediction business you're not reacting at the level, so to speak. It's more of a prediction type of thing, like, well, I'm already positioned into it, so let's see what happens. Whereas if you're breakout trading, you're both executing and managing the trade in one place. Whereas in your case, you're just managing the trade in that place, you know?
Yeah, which is so much easier, right? Like,
Yeah.
imagine, like, at least to me, right? But basically, a breakout trader has to do like a million things at once, and it's much harder to kind of prepare for all of it. I just kind of split it up into different parts, right? Like, I have the position that has happened, for example, by like at this in this instance, like a week ago. So I've kind of like had time, like, because you're always like, when you take on positions and whatever, like, it's fresh, it's new, you're a little bit in a different mindset.
Mm-hmm.
And then you also have to think, like, while you're taking the position, you obviously have to think about execution, you have to think about like all these different things, and then you immediately have to go and keep on like working it. Like, you have to manage, you have to make sure that the breakout is going to come, like all that shit, right? Like the breakout is real, is it not? And for me, I just kind of split it up. Like I think about execution ahead of the fact. I take the trade away from resistance, and then I can still do all the things that the breakout trader does. I rarely do it, but I could, and then just kind of make up my mind there without having had to go through the process of like taking the position in the first place. Like that takes a toll on you, right? Like it's work, and I like to kind of have it easy on me, and that might just be because I'm a weak European that cannot think about 10 things at once.
Absolutely.
But I think it's almost always better for anything in life really to make it as simple as you can, and you don't want to do too many things at once, because then the quality of one or the other things in what you're doing suffers, right? So I think it just makes sense to make it simple.
Yeah, I mean, if you're breakout trading, then by definition, your trade execution and trade management are all bundled into one short time window, right?
Yeah.
Whereas if you're doing something like you described, then at least you get to separate your trade execution and your trade management. And you know, that's just like a difference in strategy, essentially.
Yeah, it's not better or worse. I'm just saying like it fits me better because like I'm not that smart. So I need to make it. I need to make it as straightforward as I can.
Yeah, it's good to know though. You know, if you're planning a strategy or working through your journal or whatever the fuck you're doing, there are always going to be like intrinsic risks and benefits to any particular, and trade-offs essentially to any specific strategy. So if anyone starts selling you like, oh, this one is a fix-all, you get the benefit of this without having to sacrifice this. You know, if there's no push and pull, if there's no pro and con, you're probably being sold a lemming, or you're a lemming being sold a something. I don't speak English, so my idioms are terrible. But basically, it's bullshit. To be more colloquial about it, like, you know, there are downsides to your system, for example, and there are downsides to the breakout trading system, and there's no free lunch. Basically, you just got to figure out what works. Unless you're using my system, where your last trade was in March 2020 and you never looked back. You know, that seems to be a pretty fucking good system.
I mean, if it was long and you kept it till now.
Oh yeah, it was definitely a long. Going back to the weekly, our bullshit philosophy about breakout trading and stuff aside, what would fix this time frame? Because obviously you mentioned that the monthly and the daily look good, and then the conflict arises from the weekly, and that's in part what makes it so tricky, because it's such a good time frame. What would push it back into alignment? We sort of spoke about it last week, but now that we actually have a candle to look at, does that change? Would it be a close through 64k? Is it more conservative, like a higher high, which would be 68, 70 plus? What does weekly alignment look like?
Yeah, I mean, the best one would obviously be like a close above 70k. That would be a higher close. That's a little bit late though. So I think like a decent, like if we close at 60, 65, for example, right? That would be above the resistance that I have. People would like be all over my Twitter being like, hey Don, this broke out, like can I long this now? And for me that's too close to comfort, right? So like that wouldn't be enough. You can obviously still do it, and those kind of trades work sometimes, but I usually, like when you have these significant resistances, I don't like it when it closes like in like a 1 or 2% area around that resistance.
You want to see some real strength through the level.
Yeah. It's either like if you close at 66, then I'm going to be like, hey, yeah, there's going to be massive support between 61 and 64. And if you get any pullback, I think that's a buy, right? Like then you have the weekly time frame that at least allows for the bullish setup. And then also, like if you took the bearish setup at that point, you would obviously want to get out of it. And then that's where you would want to manage that trade, right? Like, for example, like let's say you shorted 64, it closes at 65 and you're really fucking, or like 66 and you're really fucking greedy. And you're like, I think short term, there could be a pullback. So I don't necessarily need to close my trade, even though it's been invalidated yet. I mean, you would have to take that trade off at 60, 61 to 64. So there, I think there's that would be enough support there. But if it's 65k, I think it's too ambiguous. So like a proper close above like 66, or like a higher high close, that would all kind of make this chart look a lot better.
Yeah, those sound like reasonable points for weekly alignment. But even with those, right, it's a good example of there being no free lunch. Like you take 66, it's still not a higher high. It could just be like a pushy lower high, right?
Yeah.
You're like, okay, well, screw that in that case. I'll do 70 plus. Well, there's a decent chance you're just buying the range high if we keep ranging, right?
Yeah.
Like or even if you buy the breakout in the break in market structure, be it 68 or 70 plus, and you buy that just like on a systematic entry, there's a world in which it pulls back to 64, but actually that's where the higher low forms and it's still bullish. You just bought the local top.
Yeah.
Like as long as I think in general having that type of mindset, if you take it too far, then you'll never take a fucking trade. And as much as I love to meme myself, I've definitely been a victim of that in the past. Like, oh, but if I do this, there's a risk of that. If I do this, there's a risk of that. And I'd use that as a precursor to be like, well, in that case, it's unclear. Fuck it, I'm not going to touch it. I think that's taking it too far and something I've been guilty of. I think it's better to just be aware of the risks associated and the trade-offs in any particular setup, and then take a second step to be like, well, which one has the highest expected value, which one positions me best for upside, which one am I best at trading personally, so on and so forth, as opposed to just like writing it off, because I was stuck in that middle step probably for like a solid 6 months of my trading career, maybe longer, kind of on and off, where if I didn't have high conviction in the market and I just start doing this pros and cons, it was a good step because it was thorough, but if it leads to complete inaction every single time, then it's not so good. Another thing I wanted to share that helped me as far as breakout trading goes, I'm still not great by any means, but certainly way better than I was before, is that what I would I used to do the following. I would look at a high time frame breakout level and be like, okay, this is a clear inflection point, the next resistance is far away, and that's like a formula for a good high time frame breakout trade, essentially, right? Like you have a good level and there's a shit ton of space until the next level, and the underlying idea is that you will capture that space. My next mistake would be to then go from that high time frame level once it was broken, and I would just go on a very low time frame, or like an intraday time frame, 4 hour, hourly, 15 minutes or whatever. And obviously the way the chart looks whenever there's a high time frame breakout is that the move looks fucking massive, right? And so my initial logic would be like, well, holy shit, this has moved up so much. I'm going to really wait for a pullback, or it's gone up too much for me to trade up here, etc., etc. And then that would essentially result in inaction or getting confused by the relatively big move on the lower time frames. The thing that fixed that is to basically recognize what you mentioned earlier, that if you're dealing with those high time frames, really big, really strong signal type of breakouts, you want the move to look big on lower time frames. Kind of by definition, it's giving you what you want. If anything, if the move looks sort of suspiciously paltry on lower time frames and it's just barely closing above or just barely closing below, you might think that, oh great, we're actually quite close to the level, then that's good news. I think in many cases that actually ends up being a trap. Because if the breakout is weak, there's a higher probability that it's just a wick or it's a failed break, etc. So you kind of have to get over this cognitive bias of wanting to see high time frame strength, but when viewing that high time frame strength through a lower time frame, getting put off by the magnitude of the move. Like the magnitude of the move should reinforce your view that the high time frame move is legit versus make you too worried on the lower time frames that, oh god, it's gone up so much. Do you know what I mean? Does that make any sense? So like in many cases now, the way I sort of approach these things is if there's a high time frame breakout and I want to follow up on the lower time frames, I will mark out where the high time frame breakout took place. And if anything, I'll start doing the reverse and say, okay, there's no good reason if the market is bullish on a breakout or bearish on a breakdown for the market to retrace all the way back to the high time frame level itself. So now looking at the 4 hour, 15 minute, 5 minute, whatever, let me look at intraday levels that are pretty close to price where it is now, or at least sort of shallow dips, shallow retracements, and that is the area to do business, as opposed to just looking at the high time frame level through the low time frame lens and be like, okay, if it pulls all the way back here to the 5 minute, that's a good entry. Just no, it fucking isn't. You have to sort of adjust your view. If there's a high time frame break, go on low time frames. Do not wait for it to retrace the whole move because that actually works against you. Strength works for you, not against you. And if you want to do low time frame business on a high time frame break, by definition, you'll have to do it on either no or on shallow pullbacks for the setup to be worth it.
100% agree. Yeah. I mean, I oftentimes, like the rare times where I actually breakout trade, my invalidation is usually like where other people want the pullback.
Yeah, exactly.
Like this is just not going to happen.
It's like, oh, bro, look at that flip. If it retests that, I was like, no, please don't retest that. Why the fuck would you retrace the entire move?
Yeah, why would you put all these people that like breakout bought like underwater, go all the way back to where the move started, and you have a bunch of people underwater that you can squeeze the fuck out of if you want to, right? Yes. Like it's a sign of weakness just generally because the market couldn't hold up, and then you also have a bunch of extra baggage, right? Like all these breakout traders that bought higher that are now gonna be having to sell like just not a good move. And yeah, I do 100% agree. It happens all the time. Like I see a lot of people that are right on the side of the market that they think like they're like, oh, the market is bullish, but I want this, and then like, oh, dude, I mean, just no, like
it's like I'm waiting for strength. The market gives you strength, and then you're like, oh no, not like that, you know?
Yeah, and then they're waiting for strength, and then they want the entire strength to disappear so they can have the entry that they could have had originally, right? And that's really that's exactly the opposite of what should happen, right? Like if you can get the entry that you wanted when you were waiting for strength, I'm sure that's a sign of weakness if you get it.
Yes, absolutely.
But people are always like stuck in this mindset of where they look at price, right? And I mean, I think every single trader kind of falls victim to this, at least from time to time. And it's like you have seen something at a certain price level, whether that be cheap or expensive or whatever, and you're like, I mean, this is where I want to have it because I saw it at that price level. Now it's trading higher, and I could have bought back then. And I need to wait for it to go lower or higher, whatever, depending on the side of the market you're trading. So it has to go back there. So I'm kind of vindicated, right? And I mean, it's happened to me before. Like for example, like with my recent Solana trade, where I was like trading, like I showed it 183, and it went to 160, and I was like, okay, I have other things in life to take care of, so I don't want to babysit this trade. I closed it, and then it went to 115, right? And I was like, fucking hell, like. And I was like a little bit tilted. Like I knew I couldn't trade Solana anymore, especially not on the short side, because I was kind of like, I'm just gonna lose money if I trade this, because I had this number in my head where I was like, okay, I closed 160, I cannot like, and I was like, this is just stupid. Like this is not the way to trade. And I think a lot of people do this. They have like these numbers. They know that they traded this coin at that and that price, or sold it last, or bought it last at that price. And then they kind of like get fixated on that, and it's not what you should be doing.
Yeah, it's like some sort of weird anchoring bias, right?
Yeah.
Yeah, that actually happens all the time. Like I think the strength weakness example is like the best one. You want something until you get it, you know?
Yeah.
Or it's having your cake and eating it. Like I want the clear sign of strength, but then I want a really good entry. But the problem is those two things are conflicting. If you get a really good entry, then the sign of strength is no longer valid, and you're kind of counter trading your original idea in many cases. Like if you're waiting for strength as opposed to taking risk in the first place, the mental model should be like, I'm waiting for confirmation. I have no right to get an amazing entry. That's just the trade-off. Like if you want confirmation, forget the idea of good entry. And if you got confirmation plus amazing entry all the way back to where the strength started, that's a red flag, not a green flag.
Yeah. And you kind of have to choose between the two, obviously. Like like you said, like, and this is why like I usually choose the good entry. I like it better than the confirmation. But if you miss, and this is just kind of how you can go, right? Like I think just generally you look at the market and you try to get the good entries. But if you miss it, you don't have to like necessarily chase it. You can just wait for the confirmation, right? So like if you fucked it up, like what a lot of people do, they fuck it up and then they chase it, and then they run right into the resistance that would be the confirmation, right? And then they basically get fucked because the move doesn't get confirmed, and you kind of like you have the worst of both worlds. And what you want is either you want a good entry or you want the confirmation. You don't want to have this shit in between. And I think that's kind of what gets people fucked, because they're like, they're upset about missing the move. And then they're like, okay, fuck it, this is the next best thing. Instead of being like, no, the best next best thing is going to be the confirmation. And then you're going to have a shitty entry, but at least you're going to be reasonably certain that the move's going to play out.
And again, in both cases, no free lunch, right? There's sort of, and I think there's also like and this is again speaking from experience, there's an element of ego associated with it as well. You know, like you're waiting for strength at 10,000 units or whatever. The price is 10,000. You're waiting for strength. It's a clear high time frame level, and then the market shoots through it and goes to like 10.8. Part of you doesn't want to be doing business at like 10.8, 10.6 or whatever, because at least in your mind there was some chance that this was going to happen at 10. So now you feel sort of bound for it to go back to 10, and you can't stomach the idea of having to pay up because you weren't buying earlier in the first place. That's when you wait for a full retrace or whatever type of thing. But like with those types of trades, if you get that type of strength signal and you weren't on board, you just kind of have to be an adult and a professional about it and grit your teeth if you have to and say, okay, well, the signal's been generated. If it pulls back all the way, then the signal is no longer strong. But while the signal's there, my best bet, if I want a piece, is to pay up and do business on lower time frames. That's just it,
Yeah, well said.
Daily time frame. So this is supposedly complementary to the bullish monthly and in opposition to the dodgy looking weekly. What is it? Is there a specific level on the? I mean, this chart is very choppy on the daily, I think.
It is, yeah.
No huge prizes for pointing that one out. Is there a specific inflection point that makes you put it in the sort of bull camp alongside the monthly? That level you talked about on last week's episode, obviously it worked out very well. That was exactly where the higher low was carved out.
Yeah.
But we've obviously pushed away a fair bit since
Cannot
then.
believe we haven't cloud claimed this.
Go on. Here's your window.
No, on Twitter. Like, obviously, like, on the show, like, people know, but on Twitter, no one knows.
That was a fantastic level. I did not have this shit on my chart, at least.
It actually worked really well. Like, tested a bunch of times, but in a way that is actually, like, bullish rather than bearish.
Sure, yeah.
But, yeah, I mean, I basically, like, I think we go below that, like the 50, 57, 58K cluster that I had. And we're back in bear land, right? And now I think you can even raise that whole invalidation up towards like the last red daily before the last impulse, right?
61-ish.
Yeah, exactly. Like you lose 60. I would say just a lower boundary of that cluster. Like you lose 60, it starts looking kind of shitty again. But for me, it's kind of like, unless you do this, is just clearly like bullish, right? Like we had a massive nuke, we had a really strong recovery, and then a shallow pullback to exactly the level that you would want it to pull back, and we've moved up from there. That's just bullish. Generally speaking, no matter how you draw the range, we have reclaimed the range as well. I think the best way to kind of like look at it is just ignoring the previous range. Like we had like 60K low, the low of the range, and we had like 70K the high of the range, right? I don't think the 60K low got chopped through so much that I don't even have it on my chart anymore.
Yeah, same.
But no matter how you look at the range, it's kind of been reclaimed on the daily time frame, right? And for me, that's quite significant. Like you had the proper wipeout, you had like all the chances to go lower, you didn't, and now you're kind of like just trading back in the middle of that previous range. To me, that's all bullish signs. And then you have the market having put in the massive wick to the downside, and then a higher low at 58K, and just kind of marching up. So I just look at this and I'm like, just short time frame, the daily, the last few days to weeks, it's just been bullish. And unless it starts losing 60K again, it remains so.
That's nice though. It's like an updated invalidation, essentially, up from 55 to 60-ish, basically.
Yeah. So basically, my entry was that support that we talked about last week.
Yeah.
And now the invalidation on the trade is like it closed below 60K, which very likely at the end of the day probably would take us to 50, 57, 58 anyway. Like that daily close, like if we started moving below 60, good chance that it would close lower. But I mean, at least there's like a higher invalidation on this trade again here. And I think if it doesn't do that, it's just, I mean, by design, like obviously, like if it doesn't go lower than 60K, it's gonna have to go higher, right? Because
didn't know you're a mathematician in your spare time.
Yeah, I mean, it's just how it works, right? So, so I think it's a really good invalidation. So I'm gonna have the daily time frame bullish unless 60K is lost, and I think quite bullish. Problem is obviously that that can change really fast. Like I said, traditional market's been kind of like moving a lot, all that kind of stuff. But until we get that, I'm gonna say the monthly is strongly bullish. The daily is bullish, and like I said, the weekly, in my opinion, is also like that's bearish. But I wouldn't necessarily say it's super bearish, but it is quite bearish. So you have 2 versus 1, and I have a good entry, so I'm gonna be like, fuck it. We roll the dice for once.
Yeah. Is there any daily resistance that you have that you think is worthwhile or notable?
I do have a couple, but I think they're shit.
Okay, fine.
I basically think at this point, this range is so old and so chopped through. For me, I look at this and I'm like, I'm just gonna look at the recent supports, like 60K, and I'm gonna move it higher and higher basically as we go along.
Oh, sure, yeah.
But for me, it's not okay. Where are we gonna get rejected from? It's what kind of levels can we hold?
Okay.
And so I'm gonna ignore the daily levels most likely. Like I have one at 65.3 ish,
Yeah.
and we basically hit that on the impulse day. So you could argue like, hey, we hit the support, the resistance. Maybe the trade's played out, but I tend to ignore them when they're this choppy.
Sure. So you're almost going for more of a trailing invalidation because I have a good entry and it might go up a lot type of approach, more so than where's the resistance that's gonna fucking nuke this thing.
I still think like the market as a whole is still quite risky. We still have the whole like the meme cycle came to an end, obviously, right? Like memes went down like between the good ones went down like 60-70%, the bad ones went down 100% or like 99.9, and anything in between. So we had like this whole like retail mania. It's just been like old crypto participants this time, right? Like we didn't have any new ones or like very little new ones. We had like everything that is needed to kind of like end the cycle. So I still think like there's a good, and this is why I said like the weekly time frame is a trade based on whether you like the cycle's over or not. Like if you think the cycle's over, right now is the spot to kind of short into that notion. And if you think the cycle is not over, I mean, we're gonna get a breakout basically. But we, in my opinion, we checked the boxes for cycle end. I just think that like looking at recent price action, there's a chance that we just run it to 80-90K and then have like proper like a move into the altcoins and not just the memes, and then maybe end the cycle. So like that's kind of what I'm betting on right now. But that's why I'm raising my stop loss as we go, because I think there's still like quite a bit of risk that you're just basically buying the top of this cycle, and that's obviously not what you want to bag hold. That's why I'm not like, hey, I bought 58, my stop loss is like 40
yeah.
because I think the cycle has so much more room to go. I think it obviously can, but I think it's quite risky. That's why I'm like keeping it tight-ish. Like some people would be like, hey, price is at 64 and you're talking about stopping out at 58. That's not very tight. But if you're talking about cycle perspective, right, like a full on cycle, that's very tight.
That's very tight. I mean, you've tweeted a stop loss at 0 before at the 16K bottom, so
yes,
you're no stranger to wide stops if it's a cyclical view.
Yes, I mean at that point, like that tweet was basically just saying like, hey, this shit, like at this point it's ride or die, and I'm gonna die with it. And I don't have that view at this point because I don't think 64K is as good a price as 16K is.
Well, there's an insight.
And I think the risk, and this is the funny part, right? Because people were telling me I was being an idiot for buying 16K, right? And that was so risky. But for me, the risk was very small in comparison to the risk that we have now. The risk that we have now is I buy like 58, 59, or like even if I bought right now at 64, that it goes all the way down to 40. Maybe like if macro turns really bearish, I could even see it go like all the way to low 30s. That's the lowest I can see it go. At that point, like if we go back to 30, I would be like doing the same thing as I did at 16K again, right? Where I'm like, okay, it's ride or die and I'm going to die with it. But that's not something I'm going to do at 64K. Even if it's like a really good entry before we go to 100, like that's not, like I don't think right now is the same opportunity that we had back then. So I'm being a little bit more tight. But I still think there's a good chance that we run, if the weekly invalidates, that we run towards like 80K-ish, and that's a really good trade. And that's why I'm risking stuff, but I'm not risking much.
Yeah, the update invalidation makes sense. And it's yet another example of what we spent the entire show talking about, of trade-offs in trading systems. So if you're someone who uses that approach where you don't have like a fixed exit and you more kind of trail your position and go for update invalidations, the upside is, especially in like a large move or trending environment or to catch an expansion, you basically get to catch the whole thing, right? And you don't have like a predetermined exit, which means that if you're planning to exit at a level, but you're using the trailing invalidation model, and if that level surprises you even and it breaks and keeps going, you still get to capture that move, right? The downside of that system is that if you're using an update invalidation and it's hard to update because the market's moving so quickly, or you just, it just reverses, you give up, depending on the move and the structure, some potentially significant degree of unrealized gains, right? You can imagine a world where it's hard to find like an updated invalidation, so you're just holding, and then the market hits something and wipes out and retraces all the way. That retraces sort of unrealized gains that you've lost. And of course, there are pros and cons to the other system. Like you have a predetermined entry or exit type of thing. There's 100%. I mean, we've both been through that ad infinitum. You have a first trouble area or resistance. That's where the trade is closed. That's where your system tells you to de-risk. But instead, that level just gets broken or folded depending on the market direction, and it just absolutely goes on a tear, right? So you end up selling very early or doing whatever, closing your short too late because you were focused on one level for like a full flat exit versus like an updated trailing invalidation. Again, there isn't one inherently better than the other. It depends on you, it depends on market conditions, depends on structure, etc. Just as long as you know what you're arming yourself with and the pros and cons, I just think it's a much better position to be in than to outright say, I always close at the resistance first trouble area because that's the best, or I always trail because I want to catch every move. There'll be times where that works amazingly for you and you think, thank God for my system, and other times where it fucks you and you think, oh God, I should have just closed at the resistance. Why am I trailing this shit whatsoever, right?
Yep.
I don't have any other comments on BTC. I mean, even just looking at the 4-hour, it seems to me that the basic premise is that we had a wipeout and then quite a long consolidation after that wipeout, like a 4-hour range under 62K. If the market is strong, it shouldn't really, at least in the short term on like an intra-week basis, be forming failed breakdown patterns, right? And so if you want like a really aggressive, even more aggressive than Don's style, hey, okay, this bounce looks a bit shitty or tired de-risk signal, I think forming a failed breakout rather, at this like 3, 4, 5 touch resistance at 61 point, whatever the fuck it is. Yeah, 62K, that wouldn't be a good sign.
Yeah, I agree. I mean, that's basically like it starts losing 61.8 on the closing basis. It's kind of fucked. Even on just the wick basis, that'd be really bad, in my opinion.
Sure.
But on a closing basis, especially like that, just be really bad. So I kind of like you have like a weekly invalidation, and then you have a little bit higher daily, and then you have a 4-hour, and you can just go down the list.
Yes.
Something that people do is that they then go to
sorry,
is that they go to too low time frames, right? Because then you can go to the 5-minute, and you're like, okay, if this 5-minute breaks down, it's over.
Bro, 1 minute break in market structure, sell spot.
Yeah. So you kind of have to be realistic, but I think the 4-hour is pretty good look. Like anything below 61.8, 61.7. That starts looking really shitty. And then doesn't have to mean that the market goes lower. It just means that the whole notion of, okay, we had a breakout is false, right?
Yeah.
Could just chop afterwards. Could just go to 58 and then back to 62 and whatever.
Yes.
But it just means that the idea that this is the breakout is just wrong.
Yes.
So I like it. I think something that I would use as well, depending on how the market gets there. Sometimes you get like a wipeout in the traditional markets, and then it does take you to that level, right? 61.8 or whatever. But you have relative strength in crypto, and you're like, okay, I actually didn't want it to go back here, but this is like external factors taking it there. So it's actually okay. It always depends a little bit on context.
Yeah.
But I think it's a pretty good, like, just general look on things, like 61.8 on the 4-hour.
Yeah, it's like the nearest somewhat sane invalidation you're going to get if you're using the trailing bullish approach, essentially.
Yep.
Great. I think we've. I mean, that's enough for BTC and probably for the show, to be honest. But we still have a bunch of shit to do. ETH USD. You've been tweeting about the pet rock, Don.
Yeah.
And it's been pet
Oh,
rocking, but it's been
it's gonna.
bouncing.
Yeah. I mean, it's gonna fuck me in the ass.
Right. Okay.
I mean, I just think if it's gonna do well, it's gonna do well from here, right? And it's like that. That has been a long time since we had a level that you could actually bet on, where you're like, okay, if it's gonna like maybe put in a bottom, especially like on ETH BTC, it's probably here, right? And so that's kind of why I took the position on the weekly time frame on ETH USD. We talked about this last week when we were testing the support at 2.540.
Yes.
And I was like, this is just the level that you kind of have to like play unless you just want to see the market completely implode. And it's bounced nicely, right? Like if you ignore Bitcoin, if you ignore that ETH BTC hasn't really done shit, like you just look at this chart, you're like, okay, this is not a bad bounce, right? It's up a little bit. It's struggling with resistance, and that's unsurprising, right? 2.820, like the lows basically before. But I think if it does go above that, like if it does go above 2.8, 2.9, I think there's a really high chance that ETH just basically just teleports.
Fills the gap.
Yeah, because I just not even fill the gap, just come back into the old range and then do really well. And the reason why I think ETH is in like a unique position is because basically I think very little people hold ETH anymore, and a lot of people like have history with ETH, right? Like I mean, we have all traded ETH. It's all kind of, at least to the people from our generation, or even the one that came after us, like not the Zoomers that only trade with. They came in this cycle and they only trade with. They don't care about anything else. Not those ones, but everyone that's been around for a while, right? Like ETH is kind of like the bro that you just always liked, right? Like ETH just made money for everyone, and this cycle it's not, right? And I think basically the moment ETH moves up, a bunch of people are going to be like, fuck, like I should be holding ETH. And I think it could start getting really reflexive the moment it has decent price action for the first time, because it hasn't had that at all, right? And you could have, like, we had this on Twitter for the longest time in the downtrend, where every time it moved 1%, people were tweeting about it a bunch on Twitter. And there's something we made fun of, right? Where we're like, yeah, ETH moved like 2% and everyone's all over it again. I think that has kind of like stopped now. Like ETH moves and people don't really talk about it that much. And I think basically that means like a bunch of people rotated out of ETH into other things because they got sick and tired of it. So ETH just needs to have a little bit of good price action. I think a lot of flows are going to come back. It's also been hindered by just a bunch of ETF outflows, which is also unsurprising, something we talked about when the ETF came on. And I think that's also going to stop eventually. So you have this kind of situation where, to me at least, it makes sense to have an ETH position. You're just asking yourself, when is that going to be? And I looked at the support and I was like, okay, I think that's good enough for now. I'm going to take the risk, and if that fails, I'm going to take it one level lower, which would be below 2K. Yeah. So basically, for me, it was I'm going to have to take this trade eventually. I might as well take it now at good ETH USD and good ETH BTC supports. And the ETH USD support on the weekly, I'm pretty sure you have it the same way I do, is 2.540, like that area. I think there's no real resistance besides the one that we already hit, like 2.8K. And I think if that breaks, you just want to delete all the resistances that you have on your chart and just do the same that I talked about with Bitcoin earlier. You just move on your higher your invalidation. I think if you took the trade from 2.540 and you TP'd at 2.820 or whatever.
Level to level, mate. Thanks for
level
playing.
to level. Yeah, fair enough, right? Like that's a trade. I'm hoping for like a proper move, but that is reliant on also Bitcoin not going to shit, right? but yeah, that's the nearest support. If that starts to be lost, I think it starts looking really shit, and you can pick it back up at 2K. I refuse to take a loss on this, right? So like if it goes below, like it's pretty much the same as Bitcoin. It's just if it goes below like the previous range on the low time frames on ETHUSD on the daily, if you put that up, we have like pretty clean lows at 2.550.
Yes.
If we lose this impulse and then go even below 2.550, I think it's just shit out of luck, and then we're gonna try again lower. So that's the ETH.
Yeah, it's also
USD
like a
side of things.
quintessential sort of Don trade of sorts, right? Where someone else would be like, oh, well, you could always buy the 2800 breakout.
Yeah,
and then when you hear buy breakout, something twists in your stomach, you know, your large intestine turns into Simone Biles or whatever. It's like, no, I can't buy the 2800 breakout. So then again, you reverse engineer it. How do you get exposure to 2800 plus without buying 2800? Well, you look for the closer support, which was 2.5, right? So you get a good entry there. If it breaks out, fantastic. The idea played out. If it doesn't, then you just round trip a good entry type of thing.
Yeah, and then basically I round trip it and close it, right, without taking the loss. And then and this is possible, right, like that it just makes a higher low, basically fills in the wick a little bit, and then comes back up. But at that point, I'm just going to have to bite the bullet and buy the breakout.
Yes.
Like, and then actually buy the breakout, because I think that's decent enough, right? Like I gave it a chance and it didn't do it. And then if it comes back and kind of basically makes a new high above like 2.8 and kind of starts rallying, I'd be like, okay, I bite the bullet. I just buy it back higher. And then it's like, obviously you feel like an idiot for selling like 2.6, 2.55 or whatever for break even, and then buy 2.8, 2.9, maybe 3.1. But I'm down with that as well.
Yeah, that's another psychological bias, right? Like fudding yourself out of good trades because of the trades that came before it. It's like the market really doesn't care, you know? It's not bound to your previous buy and sell history. You should treat them almost like in, you know, statistics or gambling or whatever, as like, well, depending on the type of gambling, as like completely independent events or independent probabilities. Like, you know, what was the expected value of this trade set up at 2.8, 2.5, whatever? Okay, that one's over. Now you need like a completely fresh view. Fucking delete your trading history if you have to. What is the expected value now as a sort of separate, disparate event? Because if you hold yourself hostage to your previous entries and exits, it's really fucking hard to trade objectively.
Yeah, and I think that's why poker players are like somewhat like why you see so many poker players turned into crypto traders, because they kind of learned this, right? Like the hand that you played before, like cannot fuck with your head for too long. Like if you cannot be a good poker player if you get stuck on the hand that you played before for the rest of eternity, right? But in crypto, what a lot of people do is they do get stuck with it, and they cannot get rid of that bias, and that fucks them. Over like years and years of trading this market, it's going to get less and less, but it's obviously still like, even for me, this is still something that I have to consciously remind myself of, that hey, don't be an idiot, don't do this, even though I've like traded this market for what feels like my entire life now.
Yeah, that one's tough because you get doubly fucked. You get fucked on like the previous trade history. We're like, oh, I bought here, sold here. But you also get fucked by your like historical understanding of prices in the market. We're like, oh my god, ETH used to be like $80 or whatever, 90 bucks, exactly. And now I'm buying it at like 2,800 or whatever, you know.
Yeah. So, but that's kind of how I look at ETH on the USD front. Cool. On the Bitcoin front, it's a little bit like, that's obviously a little bit of a sad chart, right? But I do have support, and still the same. We talked about this last week, pretty much while we're trading at the support as well.
So it's been a big week.
It's done fuck all. But that's fine. Like, that's fine for me, hanging around the support, especially while Bitcoin is kind of carrying the ETH trade, right?
Sure.
And I'm down with that. Like, obviously, you're not going to be happy if you're down like 1, 2, 3% on ETH BTC while in the ETH trade, because you could have just bought Bitcoin.
Sure.
But given that, like, the whole like, okay, the ETF is live and we had a lot of outflows, like that whole narrative, like I'm down to have my ETH carried a little bit by the Bitcoin move, and lose like 1% or 2% on that front. As long as I think that it's eventually going to turn around. And I think there's a chance. Obviously, like this week has been a little bit fucking sad when you look at how it's played out. The bounce came in last week, but this week's full retraced the last week's bounce. But it's still at support, and that's something that it usually does. It probably does that for the next 2 or 3 weeks, even if prices stay up, right?
Sure.
Like if Bitcoin stays up, I think there's a good chance that this just consolidates around that level.
What's your pain tolerance levels wise? Because the weekly level is slightly higher at like 0.43. The monthly equivalent, the kind of candle close before the breakout, is like 0.4 flat. Are you fine with any of that, or even a little dip below 0.4? This is like a general area type of thing, I'm guessing, since this isn't a pair that's traded explicitly.
Yeah, I mean, I'm just going to be fine whether like with whatever the Bitcoin pair does. Like I just don't want to be invalidated on the USD pair. Because I mean, I have the Bitcoin position anyway. So like it's not like if ETH BTC goes to shit and my ETH USD trade goes to shit and Bitcoin goes up, I'm going to be happy regardless. And then I'm just going to take the ETH USD position as, okay, I had exposure to the altcoin sector, to like the altcoin that I like the best. Didn't play out, but is what it is. I still made money on Bitcoin. I'm fine with that. But if it kind of like puts in like 2 or 3 more weeks of shittiness and then kind of chops through the level again, like that would make me less certain on the USD trade as well. But I just take it as like I have the USD trade. That's the important bit. I'm gonna be sad, obviously, if ETH BTC underperforms, but that's why like I don't only have ETH. I also have Bitcoin.
So ETH BTC is more of a nice to have, and the USD is the important one, and there's BTC anyway. Okay.
I mean, I would just rather make like I'd be sad if Bitcoin if ETH underperforms, but as long as I'm making money, I'm gonna be happy regardless.
And it's not like you've been holding ETH like the whole cycle underperforming, right? That starts to add up. But for a trade or whatever, it's fine.
No, I mean, if I had ETH the entire way down and I'd be coping right now, that'd be a little bit different. But this is basically, it's one of the first times I actually have ETH exposure in this entire cycle. Like I traded it a little bit in between, but nothing significant. So like this is just basically me being like, hey, there is a chance that ETH BTC actually bottoms around here. And there was an opportunity to take that position while getting carried by Bitcoin, so that I'm not sitting like staring at a red P&L all the time. So I'm kind of fine with it.
Fine. Solana, you've been tweeting about it. I'm going to throw up full stop, end of sentence. The 135 level on the weekly, and then I need to step away for 20 seconds. So please tell our wonderful audience why this level is so important, and when you're adding a hat to your Twitter profile picture.
I mean, it's kind of like the range low, and Solana's been so fucking odd. Like this range here at the highs has just been so fucking odd, because there's just been unwillingness to let it go below 125, also on the lower time frames. And whenever you have this kind of like price action around the support level and you test it over and over and over and over again, just kind of becomes really, really bad when it breaks, right? And so far it hasn't, and that's good. But like it gets you nervous. Like for me, I look at this now, I really want to see Solana above $200, because this situation just has me really fucking nervous. Because I think if the supports break, all hell breaks loose, and that support apparently only will break if the entire market goes to shit, right? So I don't know what this is indicative of, but I don't like the chart.
Oh god, I literally put my headphones back and I heard I don't like the chart.
Yeah, I mean, look at this, like it's fucking ugly chart. Now, I'm not saying like it's better than most other altcoins, because it's showing strength. It's just like it's a little bit terrifying that it's been bouncing at the same support over and over and over again, to me anyway. I would like to see it go above 200 to kind of take all of those doubts that I have while looking at this chart, because Solana is the leader of the altcoin cycle, right? Like this cycle, Solana has been the focal point, like the only altcoin really that's been dominating the space. So you want to have that bullish, because if it's bearish, what does that mean for the rest of the space? So like I want to see it go up, but it does have me a little bit like scared what happens if we actually start losing the range. It's one of the ones where like I look at the Solana chart, and it's kind of like if I look at the Bitcoin weekly chart, it has me a little bit nervous. Like both of those have me nervous. So why I'm so defensive, because I'm like, this kind of looks like it wants to like break down, but someone's defending it, making it not so. But also it's the leading altcoin. So what does it mean for the rest of the space if this breaks down? And it would mean that the space goes to shit.
Yeah,
right?
that's one of my favorite indicators. Like every cycle, when there's like a fastest horse, and or either a sector or a specific coin that emerges, tracking that alongside Bitcoin for cycle timing stuff is very, very useful. You know, we had Sol, Luna, AVAX type of meme last time round that ended up being useful in all sorts of ways. This time round, it's almost easier, right? It's BTC plus Sol. And you're more or less covered from the memes side if you sort of look at Sol price action without having to look at like a million different things on chain. I agree. It definitely looks like 120s are being defended, which is fine. I mean, the people who were early to the Sol ecosystem have very deep pockets now, and that kind of behavior is not unexpected. But in general, like it's a product of time. If ultimately the market wants to go lower, like it will go lower. And defensive type of measures only last for so long. But as long as it's the case, there's no point trying to FUD it super early in general. I have that level, by the way, as more of a daily time frame thing. At the lowest close at 125.
I have that on the daily too.
Yeah, that for me is it really. And I also think, at least for me personally, if there is a big 6K style breakdown and wipeout on Solana, I'd want to buy some. Just for a trade.
Yeah, just don't do it the same way we bought the 6K breakdown, which was like,
that was a bit early.
Yeah, I think if 125 breaks, you're gonna have weeks to buy the bottom.
Great.
On Solana, and that's like this is one of the charts that like it's one of the best altcoin charts, but it's one of the ones that has me most nervous.
Sure.
Like that's why I want to see this go up, even though I don't have any Sol, because like if it goes up, that's gonna be good.
Just get the fuck away from the danger zone, right?
Yeah. Just make me less nervous. I don't want to sit here and have doubts every time I open the Solana chart, right? Fine. Because I open this and I'm like, these people at 125, they're gonna get fucked, right? And then I'm like, but they cannot get fucked if Bitcoin doesn't go down. And I'm like, oh shit. So it's kind of like this one is a little bit of an odd one. But it's generally like when you're bullish the market, Solana's been the play. If you're bearish the market, Solana's been the play on the short side. So like that's been just generally where the market's been mostly. But yeah, I just look at it and I'm like, I don't fucking know. I don't wanna see this breakdown. I don't know if it's gonna go up. I just don't know.
Yeah, very fucking rangy as well. Not to state the obvious, but
the same on the Bitcoin pair, really. Like that's just been a ginormous range, and it looks so weak on the Bitcoin pair. To me, I don't know. Like I see a bunch of people basically be like, "Hey, this is gonna go to infinity." I look at the Bitcoin pair, I'm like, actually, like we had the high, like we had that range, right? Like to me, like my chart looks like this. I basically have like a resistance on the 18th December green candle. Then we have like basically a false breakout, and we retested that false breakout like 5 weeks ago. This is kind of like one where it looks really, really bullish against Bitcoin if it kind of reclaims the false breakout. But until it does, if you look on the Bitcoin pair, it just kind of looks bearish to me. But then I'm like, okay, if Solana is bearish and it has so much better price action than ETH, maybe I'm wrong on ETH. Mm-hmm. And if I'm wrong on ETH, Like maybe I'm wrong on Bitcoin. You know,
Yeah,
like
yeah.
that's why I fucking hate it. Like
I
I look
love
at
the trader
Solana.
doom spiraling. It's so much fun, dude.
Yeah, and I like it only happens like if I look at anything else, like if I look at any other chart, like you can make this argument with a lot of other altcoins, right? But I look at Solana and it just comes in my mind. I'm like, oh shit, am I actually wrong on this? So that's why Solana, man, let's push it up so I don't have to have doubts on my other trades anymore.
Stop the nightmares, basically.
Yeah,
But
please.
this is going to be one of those obvious hindsight LARP ones, you know, like on
Yeah.
USD and BTC. Like it breaks down, it's like, lol, it was so obvious it was being distributed and protected in the short term, and down it goes. And then it goes up, it's like, lol, you really thought it was, you know, the cycle leader was going to break down, it was clear reaccumulation. So just usual Wyckoff LARPing bullshit a lot of the
Yep.
time. I sort of intended to remake my altcoin watch list. I got a little bit of the way through, but not fully. So I've got like Whiff, Pepe, Tron, Fet, Matic, AVAX,
Oh, we're
Nia,
so
Link.
fucking doomed just by hearing that.
Just by hearing that. Have you been
Oh,
following any of
yeah.
these? Any of these catch your interest?
Oh, I mean, Whiff's been all over my like the Whiff people have kind of made peace with me. Because do you remember the last show where I was? Did I say it on the last show? Or did I say it on the Wednesday stream last week? Where I was like, Whiff is kind of like in an area where it'd be like a nice higher low. I don't know if I did say that on the Friday show on my stream, but anyway, like at 1.4, 1.5, like 1.4 something ish.
Yeah.
I was like, I mean, this is like, I'm bullish Bitcoin, so I kind of have to assume that this is basically a higher low on Whiff, and that played out, and now they love me.
Really?
Yeah. I had a bunch of people on the Whiff side be like, "Oh, watch the stream, thank you," and I was like,
Wow.
"This is kind of funny." I still think like just generally, I mean, it technically when you look at Whiff on the daily, that made a new high and it made a higher low, right?
Sure.
But I wouldn't bet too much on that. If the market goes lower, you're gonna be fucked in Whiff regardless.
Yeah.
It's just basically you have to pray that the market behaves, and then that's decent enough. Last week was basically the chance to buy it early. And I think like if you did that, like 1.4, 1.5, and you're holding on to it, that's decent enough. If you're buying here, it's a little bit risky, I think.
This thing is also really fucking volatile, not to stay beyond
Yeah,
this for
yeah.
a second time, but like it makes a big difference between like the high and the high low.
Yeah, I
Especially
mean,
if you- like yeah, percentage move wise,
30% now.
Yeah.
Like it's up 30% from that higher low.
Yeah.
Which, I mean, do you want to buy something that's just went up 30%? If the market kind of looks shaky, no, you don't. If the market looks really strong, and I think that's basically why today you have a little bit of pullback on all of these. It's basically because, I mean, Bitcoin went up a shitload and then it's kind of like been struggling it's weekend, right? Weekend price action. So it's been choppy, and so people get freaked out. Like they're like, oh, we had like a really strong day. And then the next day after that, like on Bitcoin, and the next day after that, like, oh yeah, we still had a strong day. Like we had a strong day. Now this is just consolidation. And then if it doesn't move, people start freaking out, right? And this is why I think the altcoins are pulling back a bunch. Also because like basically people just jam the leverage the moment Bitcoin moves, right? And like Bitcoin moves up. People don't have the altcoins, and the altcoins move up with Bitcoin, and Bitcoin goes sideways. The altcoins move a little bit, and everyone just fucking FOMOs in, and then they get wrecked the day after. So yeah, on the signal side of things, I don't really have much to say. I don't think there's good areas to buy or sell on this thing. If it starts losing the lower high, I think it's completely fucked. At the higher low, it's completely fucked. Other than that, I mean, if you like it and whatever, do whatever you want. But I just thought it'd be funny to talk about the fact that the whiff opinion has changed on me.
Until
they
your
like
view
updates
naturally.
I don't know. But yeah, we'll see. We'll see when I get nailed to the cross again by the whiff people. But yeah.
Pepe is also an interesting point.
Yeah, it is actually.
That's
much more
ping-pong with
interesting.
this weekly level at 880, 900, whatever.
Yep.
We've sort of spoken about. This weekly close is pushing into it. Do you think there's a reclaim argument to be made on this thing? If so, do you want to, do you want to make it? Do you want to take that? Is that attractive enough?
Nah, it's too close to. I don't like. We're on Sunday. Like, I don't think we're gonna get a big Bitcoin move that instills altcoin confidence again today. Like, if anything, we're gonna get that tomorrow. or we get a nuke tomorrow, also possible. But I don't think on a Sunday you're gonna see good price action. Therefore, I don't think the Pepe close is gonna be too constructive, right? I think we're gonna close out resistance basically, and then that's a bearish retest. That could obviously invalidate still, and all that kind of stuff. But I wouldn't want to necessarily bet on Pepe in that. Like, it's at resistance. You can, if you like Pepe, you can be the guy that buys it and hopes for the resistance to break. But I think that's like, if you're doing that on Bitcoin, that's risky. If you're doing it on altcoins, that's reckless. But yeah.
So one of those marginal candle closes that's not super interesting. I mean, on the lower time frames, it's arguably somewhat interesting because it's just retesting like a local breakout level, but this is proper like hourly, 4-hour stuff.
Yeah,
like
even on the
880.
daily, it's retesting technically.
Yeah, true, absolutely. So maybe one to watch next week.
Like if it properly reclaims, I mean, and especially if ETH, I think this one, especially if ETH picks up steam, that'd be nice. But I think like with all these meme coins, right, like with and Pepe, for example, like you're gonna get absolutely obliterated if the weekly bearish view on Bitcoin plays out, right? Like completely wrecked. Like you're gonna get the 50% down candle again, that we've grown to love on the meme coins, right? Where you just like, where it's completely and utter chaos. So you kind of have to bet on massive upside on Bitcoin on these.
There you go. Always the necessary evil. If you want to, buy some meme coins, make sure the orange coin and the world supercomputer aren't fucking you.
Exactly.
Don, how long Tron have you been?
I actually thought about it, but then I was like, fuck Justin Sun.
Right.
Like, I don't wanna like give him money. Like, even if I make money, like just me putting volume in, like I was like, fuck
look at this weekly though, isn't it mental?
I mean, honestly, like the whole like the USD pair is fucking hilarious.
That's insane. I swear we talked about it like ages ago on Casual Friday.
Yeah, we did. Do you remember?
Do
you remember the clam stuff? I mean, it's a little bit. Yeah, do you remember it?
Yeah,
like
of course,
that
Polo.
Yeah, exactly, on Polo. Oh, good old times. For the people, and I mean, 99% will not know this story.
We're so old, man. Jesus.
Yeah. But basically, there was this exchange. A lot of people might not even know the exchange, Poloniex, yeah. And someone took like the funniest trade. Basically, like there was a token called Clams. And it did exactly like, if you want to imagine how that chart looked, it looked exactly like Tron. Just like a steady walk up, and then it just literally rug pulled to zero. Someone took like a massive trade on that, just completely manipulated from beginning to end. And whenever I look at the TRX chart, I'm like, oh, this reminds me so much of the good old times. Not that there's any manipulation going on the TRX pair, but I mean,
it's just organic repricing based on rapidly improving fundamentals and discounted cash flow, whatever the fuck,
Yeah, exactly. That's how it is.
That's what makes it so difficult, Don. You're like, oh, look for the altcoins that have strength. I show you the altcoin with strength. And you're like, nope, fraud from 2018 or whatever.
Yeah, I mean, this one, I looked at it and I was like, this is probably gonna go up, but I just don't wanna have anything to do with Justin Sun. So I didn't do much with it. I look at this chart and I still think like on the USD pair, I mean, just looks bullish. On the Bitcoin pair, like that's one of the only altcoins that has been strong against Bitcoin. So it's like, it's not a bad place to kind of look for strength, but it's just in Sun, so
counterparty risk is heightened.
Yeah, and just generally, you never know what kind of fraud is going on here, and there's a lot of weird risks that you wouldn't have in other coins.
Potentially, allegedly, as speculation, we don't know anything.
Yeah, you don't know anything. Like, and I mean, this could all just be like Justin Sun having a bad like reputation, leading to rumors that are not true and just made up. Very well possible, but I don't like the guy, and I don't want to have anything to do with the coin. Basically, it's the same with Hex, for example. You're never going to see me trade Hex, no matter how bullish or bearish I am on it, because I'm just like, I don't want to have anything to do with Richard Hart. Like, I just don't like the guy, and that has done me generally well When I don't like people, then I stay away from it, because I also really didn't like Do Kwon. Like I was like, and we talked about this.
Oh yeah.
I was like, this guy is just fucking annoying. Like it's an asshole at the heart out of it. And then the thing rugs, like most of the time that is accurate. In this case, I would have expected Tron to disappear much earlier. It never has. So maybe I'm wrong in this case, but I'm just like, I have bad feelings about this. I just will never touch it. And that's it.
Fair enough. Are there any other altcoins that I could bait you in? Some of them are up on the week, but sort of are difficult to chase in these areas. Like,
Yeah.
Matic, strong bounce, but like just into a cluster of prior lows on a weekend. It's like, okay. AVAX you were tweeting a little bit about. Is there anything there that is interesting to you, or is it more of the same?
No, more of the same. I think AVAX is kind of like the retarded cousin of Sol.
Yeah, I think so too.
Like,
Remember
legit.
their meme coin fund or whatever the fuck they did?
Yeah, yeah.
Jesus. So desperate. It's like, how do you do, fellow kids? Like one of those.
Yeah. No. It's just like, I mean, if you want to, like, if you trade AVAX, might as well trade Sol. Like, I don't understand. I don't understand the AVAX trade. And to be fair, like, there was this Sol Luna AVAX trade, right? But it was always just like AVAX being kind of like the shitty Sol version.
Yeah.
And I still think that is true. And I also, like, on the topic of liking, like, this is not on the scam side of things, but I also don't like the AVAX people.
Fair enough.
Like the whole, like, yeah, like you said, with the meme fund, like all that stuff is just so dirty. Like
Stars Arena meme coin fund.
Yeah. It feels like if I was
Ethereum
bullish
should be a
AVAX,
subnet on AVAX. Do you remember that one?
yeah,
Jesus.
just like if I was bullish on AVAX and took a bullish trade, I would have to shower for like an hour after. So that's just like and then it's worse price action than Solana, right?
Fine.
And then I was like, why the fuck would you trade AVAX?
Yeah.
Other than on the short side of things, because that's been pretty damn good, just generally. Like if AVAX goes down, it just goes down to zero. Like look at AVAX BTC, that's hilarious chart.
Oh God, okay. I feel like anything BTC is like a rigged game.
Yeah, but this is a funny one.
Yeah, it's tough.
But if Solana goes up, right? If this Solana range plays out to the upside, please God,
yeah, please.
Then you're gonna see AVAX price action that is bullish too, just because people are like, the retarded cousin is the cousin after all, you know.
Yes, still at the family reunions, fucking licking the windows or whatever.
Yeah, exactly. If the AVAX people see this, they're gonna be so upset. The 3 AVAX people that might see this.
Yeah, but we're idiots who just do line make boing, right? So why listen to us in the first place? You're discrediting yourself by taking our fundamental opinion seriously. Wink, wink, nudge, nudge.
Fair enough.
Also, what makes me really happy randomly is the link. There's a trader there somewhere who finished his Baby Pips course and put a limit order to buy the weekly retest, like,
oh yeah,
last year. And he got filled and he's up now. And because he's level to level Baby Pips, he probably closed and is like the best trade of his fucking career. Just shout out to you, legend. I know you're out there somewhere.
I actually like the Link USD. Like when I was taking the ETH trade, I was like, do I actually want to just trade Link instead? And then I was like, nah, ETH has an ETF, all that kind of stuff. But actually, like the USD pair on Links actually, like for the first time in a long time, doesn't really look that bad.
Yeah.
And I think like if ETH does well, Link probably does too. Like it's one of the ones like where you have like you are reliant on ETH not dying.
Yes.
And it's, I think with a lot of the ETH ecosystem stuff, they're in a really good spot, right? Like Lido had a massive bounce this week. You had the whole Aave thing. Like Aave was one of the best performers for the longest time. Like you have a lot of the ETH stuff doing, like the good ETH stuff doing decently well. And Link is one of them. So like I'm not a hater anymore. Like I hated on the Link on the stinky Linkies for the longest time. I'm not hating on it anymore. But it's the same kind of story as ETH BTC, right? Like you look at Link BTC and you're like, it's just kind of sad. But doesn't need much, honestly. It doesn't need much to look much better.
It's funny how when you start going through the logic on altcoins, it sort of shows how there's just like a daisy chain of Ponzi assumptions. Like, this looks like this, but that's dependent on this, and that's dependent on this, and all of that is dependent on this. And if one fucking block of the Jenga tower gets pulled out at the wrong time, everything gets flattened.
Yeah, and we are in that situation with Bitcoin, which is like,
You think that's the biggest rug risk for everything full stop, just Bitcoin weekly?
I mean, yeah.
Okay.
The weekly just looks fucking horrendous to me. Like if the monthly didn't exist and if the daily wasn't looking so good, I'd be like, I mean, this is just the most obvious short. I don't know why people don't talk about shorting. So like I look at that and I'm like, that's why I'm so nervous on all of this, because I'm like, yeah, I mean, I have good entries. Yeah, this is the last area to bounce. But what if that bounce actually fails? Like you're gonna see ETH trade below 2K. You're gonna see like Bitcoin trade below 50, and it's like, it gets so ugly so quick.
Yeah, but
So
there'll be some meme coin relative strength on the green day that will get shoved in our fucking faces. Like, look at my 100 million market cap bouncing harder than BTC.
yeah. So as you can tell, like my last stream, like when we were trading at 58, was very positive. Like
Yes.
now I'm a little bit less so.
I think everyone
but
fucking knows that at this point. Low prices make you... Red candles make you happy. Green candles just turn you into a cynical asshole.
yeah, I mean that's just kind of how trading
Thanks
goes.
for
No, like
playing, right?
that's how you make money, no?
Yeah, absolutely valid.
But yeah, there's risk. I think there's risk. But
I mean, the 1 minute is just mega rugging right now. This is the reddest red candle I've ever seen in my life.
Yeah, they caught us all.
It just fully retraced the stream. That's crazy.
Yeah, it was all just a cold stop out. Like it was a stop run, and now, and yeah. But I mean, I'm just saying there's risk.
Yeah.
I just tend to close my eyes right now.
Nice.
And the reason why, and there's a good reason why, is because, like I said, I think if it goes low, it's the end of the cycle, I think. And then, I mean, might as well take one last gamble.
Before your fake retirement number 56 or whatever.
Exactly.
Yeah. Understandable. I'm going to go over the futures, open interest, whatever stuff on Monday, because people seem to find that interesting. Yeah, tomorrow. Hey, no, it's Casual Friday. What are you talking about? I've got the whole weekend ahead of us. I'll go over that then. As far as the market as a whole, obviously quarterly futures, the premiums on those jumped. That's because the market jumped as well. And it's nothing crazy. It's from like 5% to 8%, generally commensurate with price action. Nothing insane. There are some interesting short-term dynamics where premiums on perps kind of got squashed during this consolidation, despite open interest and price going sideways. That's something to discuss tomorrow. The only other thing is if you go to the market part of Velo and you want to get an overview of like funding and altcoins as a whole and how frothy it is purely from like a perp premium perspective, PPP, there's fuck all going on. The entire thing on Velo is, well, green colored, which is to say trading pretty close to the index or baseline funding or whatever. So basically, if you're assessing the different rug risks, they're probably, I think still at the top of the totem pole is BTC correlated being pullback, dragging everything down because the weekly is a bit of a piece of shit. But you don't have the ammo of, hey, look at how elevated funding rates are or how jammed the perps are with longs and aggressive positioning, because since the wipeout it kind of just floated higher, and then you get that mechanical bounce into a generally thinner ask side after a wipeout like that, and it's not sort of froth leverage driven either. But yeah,
please keep talking.
No, that's all I've got. The copium and BTC 1 minute is green now, so we're safe.
Okay, good.
I would do the news section, by the way, but I mean, we kind of covered a lot of it in passing, and this show's really fucking long anyway. The TLDR on the news stuff that I've got is spot Bitcoin ETFs see highest single day inflow since July, continuing 7-day streak, opposite to Ether. They kind of mentioned that, right? Like ETH, BTC strength, and ETF barbell portfolio memes, no huge changes there. The interesting one, and again mentioned in passing, is about macro. Bitcoin spikes up as Fed says time for a policy adjustment in Jackson Hole. There's a whole pro and con, push and pull discussion as to whether the first set of rate hikes are bullish or bearish. And the kind of hand-wavy answer is, in general, the first rate cut, because there's a lag, is bearish, but it depends on like the type of rate cut. Are you rate cutting out of a recession? Like all this type of, all this variable nonsense. But at the very least, there's like some macro risk, I think is fair to summarize. And I wouldn't blanket take the assumption that the first rate cut is bullish because rate cuts are bullish, full stop. I just not a macro expert. Most of the time don't give a fuck. I just don't think that specific argument stands up to scrutiny. Justin Sun's USDD stablecoin is no longer backed by Bitcoin. So yeah, I'm sure there's some nuance here that makes it seem kind of less bad than it is. But X users noticed that the announcement regarding USDD's collateral came from Justin Sun's personal account rather than Tron DAO Reserve. Further, to date, DAO members have only voted on one question, whether to use burn TRX tokens in May 2023. So this isn't like a super... it doesn't come across as like a super decentralized DAO, whatever thing. Most Justin Sun things are just Justin Sun things, you know?
Yeah. Your counterparty is Justin Sun.
Yeah, always. And that includes Tron. And the last one is Donald Trump endorses crypto project The Defiant Ones, spearheaded by two of his sons. I just think at this point, and Don, maybe I'm fucking speaking to you directly, if you're getting involved in Trump crypto projects, just pivot to something else.
Oh, but this one, it has to be this one, bro. This is the 10th one.
You think you can redeem your NFTs for some prorated amount of tokens, or?
No, I'm pretty sure that is rugged.
Okay, fantastic. But yeah, also, like, you're in the middle of a presidential campaign that's pretty neck and neck. Why would you... And the crypto's, I think, generally still seen as scammy, and crypto projects and whatever else, even if they're not scams, the price action can come across as scammy. Your track record in crypto, if you're Trump associated, just isn't that great. And if you really want the crypto-facing votes, you kind of push on the policy side and the SEC side rather than this your son's project, whatever shit. It just seems like bad strategy.
I mean, if the Democrats were not too dumb to actually realize that Trump basically rug pulled like 5 different projects, they would have good ammo, but they're too dumb to realize it, so it doesn't really matter. I think at this point, Trump could do anything. It doesn't really change the end results. Like, he's either going to win or he's going to lose.
Wow, nice.
Yeah. No, but he's not going to lose because he does something dumb or because he, like... I mean, he could literally steal from, like, everyone, and people would be like, they either like him or they don't really care what he does, I think.
Yeah, it's very hard to change opinions on Donald as it is. Also, I'd just like to say the 1 minute chart has now fully reversed, and there's a gap up on Coinbase. That's how bullish it is.
Oh,
so
shit.
insane signals. The market's been rescued.
Yeah, please.
Oh no, it just nuked as I was speaking.
You fucked it up.
Let's just keep the stream going for another hour and just looking at the 1 minute, providing meta commentary.
But yeah, I mean, I find it quite funny. It does show that the crypto people are actually like a pivotal part of this election now, which is quite crazy.
Only because we have money, right?
Yeah. I mean, it's all the money.
But that's politics in general.
I mean, we have money for now.
Yes, we have money for now. Study Citizens United.
Yeah.
Should we wrap, Don? What do you think?
Yeah, let's wrap it up.
Fantastic. Well, thank you for listening on this casual Friday. Hope you all have a wonderful weekend because it's Friday. Thank you to Woo for supporting the show. Their links are available in the description below. Thank you to Don for showing up on time, and we'll see you all next week.
Bye.